Gold has been an obvious choice of interest within the world of investments, as many investors, whether novices or veterans, aim to get their hands on some profitable deals. While it seems quite obvious that gold is a profitable investment, it's the comparison between solid coins and mining stocks that puts an investor in a fix. So, what are the risks and rewards of putting your money into gold mining stocks versus the tangible allure of gold bullion? From the volatility of the stock market to the stability of physical gold, each option offers unique advantages. But which one aligns with your financial goals? Before we go through these gold investment options, we should know why gold has become such a critical investment in this era. Considering its significant demand, you might have wondered why gold is such a good investment. To start, we can consider its value as a symbol of wealth and a reliable medium of exchange throughout the centuries, cherished by economies and cultures worldwide. And despite being replaced by fiat currency for trade in the modern-day world, gold serves as the core foundation of that fiat currency, and is considered vital to be reserved in state banks worldwide. It has also served as a valuable investment and continues to offer a range of benefits that make it a valuable addition to any portfolio. The very basic benefit of stocking gold is the maintained value it provides, providing a reliable means of preserving wealth. Unlike fiat currency or other assets, gold's intrinsic value does not diminish over time, and this performance during times of economic turmoil underscores its status as a safe haven asset. It's not only its demand as a means for preserving wealth, but also as a hedge against inflation, due to its inverse correlation with inflation. As the cost of living rises, the price of gold typically increases, preserving the purchasing power of those who hold it. This is because gold is priced in dollars, and as inflation erodes the value of the dollar, gold prices tend to rise in response. Additionally, unlike fiat money, which can be printed in significant amounts to temporarily evade the economic crisis, gold cannot be produced as per demand, because its supply comes from nature, and it's finite. Moreover, the difficulty and the cost of mining gold, along with its rarity, makes it one of the most demanded metals of all time, elevating its value. And it's not just fiat currency, but other asset classes as well, that do not even come closer to its value. This is due to its low correlation with those asset classes, such as stocks and bonds, allowing it to perform well when traditional investments falter, balancing the overall risk and return profile of an investment portfolio. Its liquidity allows it to be quickly converted into cash without significant loss of value, making it an excellent option for meeting emergency expenses or capitalizing on investment opportunities without delay. Diving right into business, one thing an investor should know is that he can gain exposure to gold in numerous ways, out of which a lot do not even require large initial capital to be invested in solid, tangible gold. But what are these investment options, and how should we buy them? Is it even worth investing in? Well, the dominant investing options include the old school method of investing in solid, pure, tangible gold, whether in the form of bars or coins, mutual funds, mining companies, ETFs, etc. Out of all these options, only a very few specialty funds and bullion provide a direct investment opportunity in gold, while the rest derive a fair share of their value from other sources. But what are the differences between them? Which investment should we be choosing, bullion or mining stocks? Well, if you need clarification, then let's go through some solid facts behind these two opportunities for investment so that you can redefine your strategy. As explained before, bullion is the investment in solid, tangible gold, and it is one of the most common and preferred forms of investment due to the provision of direct ownership. It means that you have a hold over the gold, and only you can decide what to do with it. Gold bullion is pure, solid, investment-grade gold, which is at least 99.5% pure, in the form of bars, coins, or ingots. These gold bars and coins are ingrained with their own serial numbers, manufacturer's name, weight, and purity stamps, which verify their authenticity. They can also be forged into desired shapes and sizes, if you don't want a predetermined design. So, should we invest in coins or solid bars? Well, this all depends on the investor's preferences, as many consider coins and ingots over bars, due to parameters such as size, security, and liquidity. While solid gold bars are captivating, their sizes make them illiquid, which complicates the selling process. So if you have a large gold bar worth hundreds of thousands of dollars, and you want to liquidate a portion of it, you will be unable to do so, and you'll have to sell the whole bar. So this makes gold coins and ingots a preferable option, as their liquidity allows complete flexibility to the owner. All in all, gold bullion as an investment is a pretty decent choice for investors, but this investment comes with some hidden charges tagged along the original price of gold. Starting with its storage cost, since you definitely will not be keeping gold bars or coins at your home, inviting robbers to your house. This vulnerability leads you to the security provided with deposit boxes or vaults of banks, which definitely comes at a price. Additionally, you have to pay a premium to the seller upon the original price of the gold, which might be 5 to 10% of the original price, and have to consult an insurance professional to insure your assets in the best way possible. You also have to verify the assets you're buying, as purchasing bullion from untrustworthy sources can result in fraud, and you might end up with gold-colored tungsten plates instead of actual gold. It's one of the main complications of investing in bullion, along with a change in the value of the gold, which rises and falls based on the market trends. So, if you are hesitant to invest in gold bullion, you can always go for its alternative, like the gold mining stocks. It is as simple as it sounds, and it correlates with your normal stock market. Gold mining stocks are an investment on the source instead of the product, meaning that you can invest in companies that are mining for gold instead of investing in the gold itself. But how is that profitable? As you know, gold can only be obtained through mining, which makes mining companies the basic providers. So, when the demand for gold shoots off the charts, so does the value of these companies and their gold inventory. However, it presents a very calculated choice for the investors, as the companies can largely differ in values, considering there might be some companies with skilled management that are capable of extracting greater amounts of gold compared to their counterparts, which might not be able to extract in profitable amounts. So a mining company's management is a potential factor in determining the end result, and the investors should be careful of mismanaged companies. Additionally, there are some other factors like the company's debts, gearings, policies, and regulations that could impact their operations and your investment. You also need to know that mining stock returns depend on the company's future performance, not solely on gold prices. In a declining gold market, a gold mining company can cut spending to stay profitable, something a gold ETF or physical gold cannot do. Gold mining stocks might also offer dividends, unlike physical gold and most gold ETFs. So it's crucial to understand that factors extrinsic to gold prices, such as the company's involvement in other mining activities, can influence returns. Now, before we proceed, if you want to know more about this shiny metal of wonder that has served as a cushion to support your back in times of economic turmoil, then like our video and subscribe to our channel for more information about gold and its investment. As we conclude this comparison, remember that although investment in gold might be alluring and profitable, it's not as easy as it sounds. In the end, its effectiveness depends on your research and your strategy before making an investment. And to gain financial security and peace of mind, you should be well prepared.